everyone, my name is Naomi Hui. So today we're going to be talking about cash flow statement. So we've talked about income statement before. Now we're going to be talking about cash flow statement. So when we look at the phrase of cash flow statement, we kind of already know what is in it, right? So cash flow statement is like a finance spreadsheet that's going to show you how does your cash flows in and out. So it's going to track your cash entry and your cash leaving. So basically, what will you spend on? What did you spend on? What did you lose money on? Or what did you earn money from? So we consider and track all of these cash flow statements based on these three sectors. First is operating. So operating is when it is the things that comes from the core business activities. So it comes from the core business operations. So it could be cash flow from customers paying, or it could be cash flow from paying for employees, paying for people that work for your business. So these are the basic fees that comes with the progress of operating your business. So again, it could be things like selling things to your customers. So what do you sales to your what do you get from your customers? So what do they pay for you? It's also part of the operating expense. But then also there's a part of where you have to lose from these operating expense, which is you need to pay for your cost for your employees, because again they're not working for you for charity, right? So they would need to earn something from you. So that is operation. Secondly is investment. Investment is things that comes from the things that you buy, the things that you pay for, so that you can gain in the future. So for example, it could be what you sell and what you buy as an equipment for your machines or for your product, or what you sell for other businesses. So that is investing. And also another example could be like when you invest for different kinds of machines, things like that. So maybe you won't earn from it, but you definitely will maybe have a chance to earn. So that is investing. So you pay an amount of money so that maybe in the future you would earn something, or you would most likely not having your cash leave your net income. And thirdly is financing. So these financing expenses could be example like borrowing, when you borrow money from other businesses, or you pay or you repay for your debts that you have did in the past. So let's say last year your company borrowed from a person. So that money when you borrowed, you would have it in your cash flow statement, right? So it is an entry. But again, when you repay for it, even when you repay for it, which is a positive thing, right? You'd still lose money because you need to repay. You need to take amount of your money and you repay for it. But a trade back of that is that your debt goes down. Okay, so that is what financing expenses. So for these three sectors, which are operating, investing, and financing, you are able to comes up with a conclusion of all of this and walks through your cash flow statement. And your cash flow statement is very important because it is part of of information that you take for, so that you could know, oh, what will my income statement be like? So what will be my income, right? Because after you finally balance things out, then will be the time that you would know how your business earns and how your business use. So that is why cash flow statement is actually something so important. So when you look on a cash flow statement spreadsheet, you'd be able to know two informations: whether or not the cash flow, which is like cash entering your business, or a cash flowing, which is leaving your business or not. And you track that through three sectors, which are first, operating, second is investing, and thirdly is financing. So thank you so much for listening.